tax overhaul that took effect on January 1st, 2018 brought with it some pretty big changes that could trip you up if you're not careful. We saw some serious changes for both small businesses and individuals, and if you want to avoid writing a big check to Uncle Sam next April, here are a few things you need to do. First, check your withholding. When Congress lowered the tax rates for 2018, the withholding tables were also lowered, meaning that less money is taken out of your paycheck. But for many people, the tables were lowered a little bit too much, which means those unwithheld taxes will eventually be due and payable when you file your return in 2019. So it's a good idea to do a quick tax projection to see if you're on track and make sure that you are withholding enough. Second, see if your deductions have changed. One of the big changes involved the SALT deductions, or state and local taxes. For tax year 2018, these items are capped at $10,000 on your itemized deductions. In past years, you might have been able to deduct much more than that on your federal return, but with these deductions eliminated, you may find your tax bills a bit higher for this tax year of 2018 than it was in 2017. For others, the cap on deductions will cause them to cross over the new standard deduction, which actually went up to $24,000 for married couples filing jointly and $12,000 for single filers. Here's another idea. Consider bunching your charitable donations. If you're limited to the standard deduction and you plan on giving to qualified charities for the foreseeable future, you may want to consider front-loading or bunching your donations in one tax year. So let's say you normally donate $5,000 per year to your church, which in previous years when you itemized, you're able to write off on your federal taxes. But now that you're capped out this year, what you might want to do instead is try to make a single lump sum $25,000 donation, which is 5 years worth, in a single tax year, thus allowing you to itemize your deductions and write off the excess charitable contributions. And finally, know which deductions are no longer allowed. One major deduction that's gone is the miscellaneous itemized deductions. In the past, these deductions were allowed if they exceeded 2% of your adjusted gross income. Having them no longer available could be a big surprise to those who normally deduct mileage, entertainment, meals, non-reimbursed travel, as well as those normally who deduct their investment and tax preparation fees. These are just some of the many changes to look out for. If you need help with your tax planning, it's not too late, but time is running short. Just give us a call or look us up. We're always here to help.